Welcome back to the Property Auction Hunters channel with your episode Deal or No Deal. So this is series 2, episode 1. We've got Omar Mehmet, we've got Piotr Ruzinek, we've got Jay Howard, my safe Jersey on my soap. We will get started with one of Jay's properties. So Jay, do you want to kick it off for today?
Absolutely, thanks, Safe. So yes, it's quite uncommon for me to talk about this type of property because anyone who knows me knows I have zero intention ever of buying an HMO. But when you see a property like this in a prominent London auction, it's difficult to not want to talk about it. So today we are talking about lot number 25 from the Savills 24th of January auction. This is a good one. It is 63 Chartley Avenue in Neasden. So that's NW2 7QY. It's guided at £600,000. So this is an interesting one. It's on a road that almost backs onto the North Circular, the A406, and it's just before you, just after Brent Cross, and just before you get to the IKEA. So whoever knows that part of town well will be able to pick out roughly where it is. So it's near the Welsh Harp, if anyone knows the Welsh Harp, been sailing in northwest London. But this is an HMO. No internal images. It is understood to be 8 bedrooms. It's an absolute guess. I'm sure there's some planning somewhere for it, sui generis. But it's understood to be 8 bedrooms. And the thing that caught my attention, and we've bought properties like this before, and certainly know Safe has as well, but this one is tenancy unknown. Okay, so that could mean anything. That for me, that could mean squatters. It could mean people who've got regulated tenancies rather than assured short hold tenancies. It's being sold by LPA receivers. That's Law of Property Act receivers. So the owner has either gone into bankruptcy or self-administration or whatever it may be. But there's so many things to like about this. The location, I imagine in an area like this with 8 rooms, you've got to be thinking it's got to be close to £1,200 a month per room, probably on the light side. Depends on what the internal condition is, and we don't know what the internal condition is. So we'll assume fair to reasonable. And it has planning permission. So if that wasn't good enough, if an 8-bed HMO in northwest London, NW2 isn't good enough for you, there is planning permission to extend across to the side of the building, part single, part 2-story with a hipped gable. This one stood out. Unfortunately, we've caught the knife a little bit early on this deal, and there is no legal pack. There's no internal pictures. There's no tenancy agreements. There's nothing. But this is, for me, pointing out one of the beautiful things about auction is the guide price here that we're looking at is probably a shade over bricks and mortar value for the property. They've not really factored in the income, if it is producing an income. There may be people in there, there may not be people in there, they may be paying, they may not be paying, there may be arrears, there may not be arrears. It's one of the beautiful things about buying a property that's being sold by a receiver or a bank, or people who don't really have a deep connection or understanding as to the operational side of the property and the business around it. So who's got something to say about it? I like it, and I don't normally like HMOs.
I think just briefly looking at this, HMOs in London are about 100k per room, and I would expect this to be worth around 800. This being guided at 600, being sold by receivers with tenancies unknown, seems like on the verge of being potentially a deal. But it's like a further research is like much further research is required to actually say whether it's a deal or not. But I also think this area is very much a regular buyers area. It's very well established. There is a lot of HMO buyers in this area and kind of long-standing landlords. And I think it will be snapped up by someone. But like I said, further research is required. We did a couple of deals like this on properties that are offered with tenancies unknown. I think those are really good. It does require a bit of a detective work. It does require knocking on the door, having a chat with the tenants, maybe offering them a bottle of wine, maybe a note or two to release the information that are required to buy this. And potentially it could be a good deal. Is it a deal of a century? I don't think so.
Yeah. I mean, I think there are people living in there because if you look at the photos, the attic room windows are open, the first floor windows are open. So that indicates to me that there are definitely people living in there. To me, this is a classic example, and I'm just taking this on probability here, of a live-in landlord potentially. So it might be a live-in landlord where there's already tenants, obviously, in the other rooms as well. So it could be that, or it could just be that it's obviously tenants living in rooms. So yeah, HMOs, they are like Marmite. People either love them or people either hate them. However, one thing I would say is HMOs in London work really, really well. And the reason is because the actual gap between your one bed flat and your HMO room is quite wide, that actually there's a big, big demand for HMO rooms. So you don't get as much tenant turnover in them, and the rentals are huge on them. So I actually like HMOs in London for that reason. And the second reason why I like HMOs in London is because the bricks and mortar value is very, very close to the commercial value. And actually sometimes, maybe even similar cases to this, the commercial value is lower than the actual bricks and mortar value if you're dealing in high value areas. The only note I looked at is there is not a single property on that road that's ever sold for £600,000 or more. They've always been under £600,000 because majority of them, I guess, have sold for bricks and mortar. So the fact that there's a tenancy unknown, the fact that what most people do, as you're probably aware, is go on Rightmove sold prices and see that there's nothing sold for over that price previously. I actually think that will put a lot of people off because this is not for a naive buyer. This is for a professional buyer that knows what they're doing. But at the same time, I think there's value and merit in an 8-bed HMO, fully tenanted, sold on the open market through a specialist, sales agency, and that single story extension as well is going to have value. So for me, I don't think there's going to be a deal done potentially at auction, but I think with receivers, Jay, as we've been seeing in this day and age, receivers are very, very, like their expectations are too high. So the reality is they'll put it in because they had a RICS valuation at this, and then they'll reduce it until it sells, in my opinion. So I don't think it's going to sell.
Let me give you a brief info from EIG. I have just looked up the history of this property. So actually, it's never been offered in the auction first time. But when I clicked on the sold prices, this property actually sold twice in the last couple of years. Sold for 620 in 2022, and then again it sold for 715. And I'm assuming this was after the planning permission was implemented for the side extensions. So I think the value of this property is fairly kind of like there's certain aspects of it that can be predicted. And clearly this property was purchased in 2022 with some sort of bridging finance. And now the bridging lender is repossessed it because within a year this wasn't repaid. So I am thinking that this might sell for something around 600 based on those things. And I think the income from this property, being 8 rooms, 800, 900 pounds a room, that's probably going to be about 80,000 per annum. So 625, 650. What do you think, Omar?
It's really interesting. And this is the first time I've managed to listen to everyone else's opinions before jumping in and giving my thoughts on this one. So I'm in a bit of a privileged position, having heard all of your thought processes, which I think are really interesting. I know a thing or two about HMOs. Having owned some and still own some at the moment in the south. I think that everything you said is valid, and I don't disagree with any of your points, but I think there's a bit of a red flag with this property. And I think Piotr has kind of hit the nail on the head with why it sold a couple of times, perhaps why it's now in LPA receivership and why it's back in the auction. As you guys all know, this is an 8-bedroom HMO. It's being marketed as an 8-bedroom HMO with no access to internals to see the condition as to whether it has ensuite rooms or tea stations, kitchenettes, and what's the situation with the utilities. We're unable to look at further information like HMO licensing and things in the legal pack, but there are lots of unknowns with it. And assuming there's no planning for it being a HMO, because to be an 8-bedroom HMO under sui generis use class, it would have had to have gone for a full planning application. It could be a very dangerous buy. And if somebody's bought this on bridging and then realised there is no planning, the list goes on and on with all the complexities that could come out. Essentially, if you can't establish planning for an 8-bed HMO, that's a major problem. If you can, you still then need to get over the hurdle of building regs. And converting a C3 residential home into a sui generis HMO requires soundproofing, impact and airborne sound tests to be done at the end of the project. And if that type of work wasn't done when the conversion happened, it's it's dead as a dodo. You may as well convert it back to a 6-bed HMO. And that's even assuming if this is a non-Article 4 area. Now, I don't know Neasden. I would imagine it's an Article 4 area. So they probably don't really like 6-bed HMOs around there. In terms of evaluation, I think it's worth more than what you guys are saying, but it's only worth more if the planning can be established and the building control can be signed off and there's a valid HMO license and you can get inside, confirm the tenancies, and hopefully they're ensuite rooms. And there's lots of hurdles to get over. If all of those things can be established, if this property is producing £1,000 a room for an ensuite room in that area, you're talking just under 100 grand's worth of income. I think this would value easily at 800 to 900,000 on a yield-based valuation. So it could be quite a profitable property for someone to hold, a really high-yielding property, but it's getting through all those hurdles. And if one of them falls down, it could be something you buy and then have to perhaps lose quite a lot of money or do what the other people have done and re-enter it back in the auction just to get it off your books, really. So quite a dangerous one. But without the legal pack, I'm a little bit unknown. What do you guys think this will sell for, if it will sell? What are your thoughts?
This is a tricky one. I kind of suggested this lot because I like the complexities involved with it. There's got, as you mentioned, even with the HMO requirements and the planning requirements, hadn't even touched on that. But with all the stuff prior to that, I kind of thought, well, it's interesting to discuss it. I think it will sell. I think it will probably sell within £30,000 of the guide.
Yeah,
I don't think it will sell well. I think any HMO buyer, you're not going to get someone who isn't an HMO buyer buying this. Any HMO buyer is going to look at this and go, where is all of the compliance stuff needed for HMO? Where's the license? Where's the planning? Blah, 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 blah. And if they don't get that, people are going to start discounting heavily to address the fact that they have to resolve these issues. And they tend to be either timely, which can be costly, or costly. And the costs tend to rack up over time. So that seems to be the issue. But I think anywhere between 6 to 630 is probably where it will end up. But even though I'm saying that, I'm 50-50 whether it will sell or not at all. So it's a big 50-50 for me.
I'm going to stick my neck out on the line and say it's not going to sell. I just think when you think about the type of buyer for this stock, right? We're not talking about owner-occupiers. We're not talking about novice investors here. We're talking about very, very, I'd say, advanced investors, right? So people that want to do the buy, refurbish, refinance model, people that want to be able to kind of leave no money in, etc. People that really want to be able to get a deal done. And I feel like there's money in this, but for the risk you're taking, and we won't know the exact risk until we see the full legal pack. So is there a planning risk? Is there a licensing risk? Is there an enforcement notice risk? The only thing that kind of threw me with your comment, Omar, about the kind of planning is that they did go in for planning on the side, where the extension is. So it's kind of like, would they try and shoot themselves in the foot by potentially opening up a door for them? I don't know, but that's the kind of only thing that I was thinking about. So my point with this is not only do you have a planning and licensing potential risk, you obviously have the whole tenancy unknown risk, which is one of the biggest risks, because when they sell this, they're going to sell this with no title, right? Guarantee. So there's absolutely no title guarantee. So there's no guarantee that it's not got knotweed. There's no guarantee that it's not got subsidence. There's no guarantees about anything. So for that risk, I would expect this to be guided at around about 450 to 500, in my opinion, to take that risk as a buyer. At 600, it's not attractive enough to bring people in to even do all of that effort. Although I know there's investment value in it, maybe with a GDV of 800, 900, I feel like that's really trying to push the boundaries in terms of where the investment value would be. And you'd want to be comfortable with that. So for me, I feel like it's not going to sell, but I'll stick my neck out on this one.
I'd like the privilege of going last, because I got 3 out of 4 right last time.
Okay.
Go
I
for it,
agree.
Owen.
I don't think it's going to sell. I think that if somebody does buy this, I'd be quite scared for them if they haven't done their homework. And if somebody buys this going in blind, I just hope you've watched this video before you bid on the property, perhaps something like that. When the legal pack comes out, if you see 40, 50 documents in the legal pack, including the license, perhaps some tenancies that get discovered, fire extinguisher tests, electrical, alarm, all the stuff, the HMO regulation, and you can establish sui generis use class, you can do your homework into building control and find that it was signed off for the use, then it could be a deal. But without all of that, it's as the other guys have said, it's just way too risky. And I think, you'd be better off doing some more homework and trying to establish it, perhaps at a better price. So for me, I don't think it will sell. I hope it doesn't sell, unless the legal pack comes out and gives someone some confidence to buy it. But it could be a real dangerous one otherwise.
Brilliant. Well, I hope the guys at Savills are not listening to this, because I also don't think it's going to sell. And at this stage, with the information that we have, without the legal pack, without all of the due diligence that's required, I think it's way too risky. And even with the information, there will still be a lot of information missing. So it's not selling, in my opinion.
The final thing,
Jay is the only one optimistic.
The final thing to add to this on a perspective as well, you've got, for clear, obvious reasons, most auction transactions are difficult to mortgage, let alone a HMO with missing documents. But obtaining a HMO mortgage is near enough impossible. Bridging is actually even slightly challenging because of the limited title guarantee, the tenancy unknown. It's going to be one of the more obscure bridging providers that will potentially lend on the site. So we are talking about someone coming in with cash as well, which adds to the reduced pool of buyers, I guess.
Just to reconfirm, although I think it will sell within 30 grand of the guide, I did say I still think it's selling as a 50-50. So
Jay, your range is too big. Your range is from not selling to selling for 650 or 630. Too big of a range. You're disqualified.
That's no range at all. But like I say, I'm taking Piotr's word of optimism. I want that stricken from the record. I'm not optimistic about this property.
Yep. Anyone watching this, please don't share this video of Jay saying all those things.
Yeah, so guys, stay tuned. We will be releasing, after we release all the 4 videos, we'll be releasing the auction results as well. So stay tuned for that one. Please, as ever, like, share, subscribe. As much as you guys can share this with everyone else and just push it out, obviously helps us to create more content like this. We do it absolutely free for all of you guys. And also, as we said before, if you guys do have a specific lot you want us to be able to kind of do a review on, please put it into the comments, engage with it, and we'll be happy to review that as well. So yeah, thank you, Piotr. Thanks, Jay. Thanks, Omar.